Hello, hi, good morning everyone. My name is Gaurav and I'll be teaching today tax law in BBA LLB. Hope you enjoyed this lecture. So the subject is tax law and the topic we're just going to start the introduction to tax law. Now what are the topics is to be covered today? We have the introduction, the historical background of the taxation law in India, how it came in India, how the British government has started inculcating the tax law in the Indian domain. We have the powers of the different list that is mentioned in Union 1 list, state list 1, list 2 and list 3. So here we'll start. We'll have the brief historical background. So a brief knowledge of the history of tax law in India is essential to understand the present tax system. So the tax system of the British India reflected characteristics of traditional agricultural economy. Revenues of the central government were dominated by custom duties as domestic requirements for manufactured goods were met mostly by imports. Revenues of the central government were dominated by custom duties as domestic requirement for manufactured goods were met mostly by imports. Various customs and tariff enactments were passed from time to time. The most significant among them were the Sea Custom Act 1878 and the Tariff Act 1934. These enactments were consolidated into single legislation, the Custom Act 1962. Excise taxation is the modern form date back to 1894 when for the first time a duty of 5% ad valorem was imposed on cotton yarn of more than 20 counts. Apart from the indirect taxes, among the direct taxes, the chief source of the revenue was the income tax introduced by India by the British in 1860. To overcome the financial difficulties created by the events of 1857, till 1886, the income tax imposition remained irregular. Thereafter, it became systematic. The form of income tax has undergone a series of changes to meet the ever-changing requirements of the finance and economic policy. The Act of 1886 levied tax on income both the resident and the non-resident in India, keeping the agriculture income beyond tax liability. The Act remained in force for 32 years till the new Act was passed in 1918. The legislation charged all received casual or non-recurring pertaining to business or profession. The Act was replaced by the Income Tax Act of 1922. In view of the reform introduced by the Government of India Act 1919, the significant change brought the Act was the introduction of the set of laws from one source against the income from the other source. It also introduced separate department for income tax administration. The slab rate system was introduced in 1939 on the recommendation of the Income Tax Inquiry Committee 1935. The present law of income tax in India is governed by Income Tax Act 1961, which replaced the Act of 1922. It came into force on 1st of April 1962, and since then it was amended. Tax rates are not given time and again in the Income Tax Act, but in the Finance Act, which is passed by the Parliament along with the budget for the central government every year. The constitutional scheme. In the Indian Federal Constitution, the powers of the centre and the constituent units are well defined. The legislative powers of the Union are enumerated in List 1 of the 7th schedule and those of the state in List 2, the concurrent powers being found in List 3. The power of taxation exclusively conferred on the Union legislature are in respect of the following subject. Number 1, taxes on income other than agricultural income, duties of customs including export duties, duties of excise on tobacco and other manufactured or produced in except alcoholic liquors and narcotic drugs, narcotics, but including medicinal and toiletry preparation containing alcohol, etc. Corporation tax, taxes on capital value of asset exclusively of agricultural land of the individual and companies, taxes on capital of the companies. Next, we all have the estate duty in respect of the property other than agricultural land, duties in respect of succession to property other than agricultural land, terminal taxes on goods of passengers carried by railway, sea or air, taxes on railway fares and freights, taxes other than stamp duties on transaction in the stock exchange and future market, rates of stamp duties in respect of the bills of exchange, checks, promissory notes, bills of lading, letter of credit, policies of insurance, transfer of share, debenture of insurance, transfer of shares, debentures, proxies, and receipts. Next, we have taxes on sale of purchase of newspaper and on advertising published. So these are the things, these are the brief of the taxes that has been levied by the central government, which is, so these are the brief taxes that has been levied by the central government under the union list. So also we have taxes on consignment of goods, whether consignment is to person making to it or other person, where such consignment takes place in the course of intrastate trade or commerce. Next, we have the brief of taxes that has been levied by the state list. Some of the important taxes that has been levied by the state list are taxes on agricultural income, estate duties, taxes on land and buildings, taxes on unusual rights subject to any legislation imposed by the parliament by law, drugs, duties of excise, duties, taxes on entry of goods into local area for consumption, taxes on the consumption or sale of electricity, taxes on sale of purchase of goods other than newspaper, taxes on advertisement other than the advertisement published in the newspaper, taxes on goods and passengers carried by road on the inland waterways, taxes on vehicles whether mechanically propelled or not suitable for use of roads, including trammers subject to provision of the entry 35 in list 3, taxes on animals and boats, tolls, taxes on profession, trades, calling and employments, capitation taxes, taxes on luxuries, including taxes on entertainments, amusement, betting and gambling, rates of stamp duties in respect of document other than this specified in the provision of list 1 with regard to the rates of the stamp duties. Next, in the concurrent list, we have two entries relating to the taxation, that are entry 35 and entry 44. The former relates to the principles on which taxes on mechanically propelled vehicles are to be levied. Entry 44 reads stamp duties other than duties on fees collected by means of judicial stamps, but not including rate of stamp duties. This means that the union government and the state have the concurrent power to legislate as to stamp duties of non-judicial documents, except in the regard to the rate of such duties which are to be levied according to entry 91 of list 1 or entry 63 of the list 2, depending on the nature of the document. The residuary powers of the legislation as to the subjects not covered by any of the legislating list vest by virtue of entry 97 of list 1 when the central legislature. So this is all for today. I hope you enjoyed this lecture. Next class we will be studying briefly about the taxation system in India. Thank you very much for paying attention.